Look, prices have dropped from 491, the median sales price, to 471. That's a $20,000 price drop in value.
No, man, that's really not what it is. Yeah, that's what it peaked out here, but year over year, a year ago, they were at 417. This year, they're at 471. So, hey guys, Freddie Crespo, broker, owner of Investors Real Estate. The Fannie Mae housing report just came out, and I wanted to share that with you guys, that things are not as grim as many people are forecasting. Okay, so we're just going to get right into this. As you can see right here, this is the Fannie Mae press release on November 21st, 2022. Economy still expected to enter and exit modest recession in 2023. I've been talking about this recession. We've been in a paper recession, but we are no longer officially in that paper recession because the GDP numbers came out and they were not in decline. So that broke that pattern. Moving on, I'm just going to go into this highlighted area here. Total single-family home sales in 2022 and 2023, which are projected to be 5.67 million, that's for 2022, and 4.42 million respectively in 2024. Single-family home sales are expected to rebound 18.6% from the year prior to 5.25 million. Reflecting an anticipated modest pullback in mortgage rates and broader economic recovery, and continued lack of housing supply. That's the big thing right there. Continued lack of supply. If you look at some of my other older videos where I talked about Fannie Mae saying that we're 4 million homes underbuilt in the United States. That should support new home construction. A significant contributor to the ESR Group's pessimistic home sale path remains the so-called lock-in effect. I do want to talk about the lock-in effect. That basically means if you own a home and you want to move, but you have a 2.75% interest, and now you're going to get an interest rate of 6.5%, that doesn't really make sense to make that move. So a lot of homeowners are locked in, and that's what that locked-in effect is, and that has produce a deceleration in sales and even in prices a little bit, but we have yet to see 1 year of prices going under the previous year prices. We haven't seen that yet. Okay, so moving right along, basically more than 80% of borrowers had a mortgage rate at least 200 basis points below the current market rates, which basically means 2% lower. So it really doesn't make sense for them to make that move. Now, Jerome Powell spoke today, and this is interesting. Let me jump over to that. There's the interest rates today, 6.5%. That's from the Bank of America website. Let's go into this. Jerome Powell spoke today, and today is November 30th, and he said it makes sense to moderate the pace of our rate increases as we approach the level of restraint that will be sufficient to bring inflation down. So basically they're going to moderate that pace. They're going to slow it down. That's what they said. The stock market has soared today, so if you guys had some money in that, you're doing well. Jerome Powell continued with the time for moderating the pace of rate increases may come as soon as December meeting, which is basically next month in about 2 weeks. So basically what that means is the interest rates are not going to be going up as much as a lot of people have been saying, into the 8s and 9s and all of that. It looks like we're probably going to stay below the 7s, and we'll have to see next year, but we're probably not going to be getting out of the 7s, and hopefully that'll be the peak, and then it's talking about reducing rates later on in 2024 once the recession is over. Okay guys, so now I'm going to move on to the housing data, right? Because we want to find out if prices are going to go up, if they're going to go down, what's going to happen with interest rates, supply and demand, all of that. Right here, I want to show you something. I'm going to get rid of all of these and I'm going to start over so you can see what these are. Here's 2019 line is blue. The 2020 line is red. 2021 line, this is on the entire United States, by the way. Orange line is 2021. I'm going to tell you what these lines mean in a second. And 2022 line is black, okay? Now, when you see this black line cross over like this, let's pretend this was median sale price. That means that prices are dropping. They drop below the orange, the red, the blue, and now they're down year over year. And in this case, they would have been down, the past 3 years. But that's not the case. This is new listings. We're looking at new listings right now. And what does that mean? That means that the listing inventory is lower than the previous 3 years. And supply and demand says the supply is low, therefore the prices are going to go up if the demand is high. But the demand has also dropped. Okay, and we're going to get into that in a minute. But let's just jump into the median sale price right now. This is in the entire country. Look how those lines are so different. 2019, they went up. 2020, they went up. 2021, they went up. 2022, they're still up year over year. Even though you see this decline in prices, it's just a decline within its own year. So you can't get too crazy about that. And a lot of times you do see that. See here in this, you see the decline here on the blue line, the same thing. Typically towards the end of the year, you see that decline right there as well. And then you see that decline right here as well. So this is just a little more exaggerated because the rates did go up. But really, in reality, the supply is so low that this black line's probably not going to cross this orange line next year. But we'll see what happens. I'm anticipating a 3% increase in prices in spring of next year, or basically year over year, 3 to 5% increase. Let's see if I'm right. Okay, so that's in the entire United States. Now, we're going to go ahead and go into, let's click on pending sales. I wasn't going to do this, but let's just do it anyway since we're here. Pending sales, you can see the pending sales are down. And that's because that's demand. So the demand's down and the supply is down. And remember, the supply is down because of that lock-in effect, right? All right, now let's go ahead and go into Orlando. All right, we're in Orlando now. Don't panic. We are under new listings. New listings are down, just like the whole country, and especially in Orlando. It's a hot, hot market, and it's going to stay hot. That's listings. They're down. That means inventory is down. But here's the median sales price. Look at that. This is where we're at. This line is not going to be crossing over here. Prices are still at an all-time high in Orlando. So if you own real estate, that's great. If you need to get out, you're going to make a lot of money. You have a lot of equity in your home, and that's great. There's other things that you can do. Give us a call, and I'll let you know what you can do and how to keep it and have someone else make those mortgage payments for you. All right, so that's the Orlando metro area. Now we're going to go ahead and move on to the Miami area. All right, so here we go. Again, these are new listings. New listings in the Miami area are down. 4-year low in Miami, right? Same as Orlando, same in the whole country. And that's exactly what we're piggybacking off of what Fannie Mae just said of that low supply. Now, we're going to go to median sales price. Boom. There are those numbers. I mean, you can't, these numbers don't lie. Look at that. $471,000 is the median sale price in the Miami metro area. Now, people can say,
look, prices have dropped from $491, the median sales price, to $471. That's a $20,000 price drop in value.
No, man, that's really not what it is. Yeah, that's what it peaked out here. But year over year, a year ago, they were at 417. This year, they're at 471. So you got to compare apples to apples. We can compare this peak to this peak to this peak to this peak. You can't compare this peak to now. We're basically December 1st practically. Of course, the prices dipped in October, November, December. So anyway, that's where we are in Miami. Prices are going to continue to go up next year, probably not as fast, obviously, as the previous years where they've gone up 18% and so forth. So that's what's happening. In closing, guys, prices are going to continue to go up next year. That's my prediction. They're going to go up about 3 to 4%. I've already said that. If you've got that lock-in effect, but you have to move, and you are here in Orlando area, Miami area, Florida, give us a call. Let me know. I can show you the right way to be able to get out of that low interest rate and get into a lower rate, you have to buy down that rate, but there is a way to do it. At least you can see the numbers. Don't feel trapped. There is a way out. You've got all that equity, and you certainly can make that move and get to where you need to go. So anyway, I've said too much. You guys have a great day, and let me know in the comments below, if you're watching this on YouTube, what metros you'd like me to show you next. I can do the whole entire United States and break it down to see what these cities are doing individually compared to the nation, but they're all pretty similar. There's a few that are getting hit a little harder just because they've got more supply and the people are moving out and things like that. So anyway, have a great day, and we'll see you on the next one. Take care.
Not just a home, it's an investment.
Investors Real Estate, LLC.